They took to the kitchen to reinvent the taste of what they brought to your door. Now, with every business in the disruptive crosshairs of technology, Domino's is reinventing how they connect you to your pizza. Online, on the road, or in the air. Does Domino's have the recipe for earning a bigger piece of the pie?
Some companies are so good that when the skeptics come out in force and start bashing their stocks, you need to take action, do some buying, because you may never get a better opportunity. Case in point, Domino's Pizza. Roughly a year ago, Domino's reported its first, I didn't even think it was disappointing, but some called it disappointing quarter in ages. Stock dropped more than 10%. All sorts of commentators claimed the incredible multi-year rally was over. That was your chance, because since then, Domino's has come roaring back, reporting great quarter after great quarter and climbing nearly 60% from its lows last May. And if you were patient, you got another buying opportunity earlier this month. Once again, the bears started coming out in force. Some outfit called M-Science published a report claiming that Domino's retail sales growth was trending below consensus by 250 to 350 basis points. Domestic same-store sales growth were well below consensus. Despite its fabulous long-term track record, the stock still dropped from 185 to 175 in response. But you should have been buying again, because not selling, because as we found out when the company reported another blowout quarter this morning, it is doing fabulously. Domino's delivered a 10-cent earnings beat off of a $1.16 basis, higher than expected revenue, spectacular same-store sales, a domestic 10.2, international 4.3. I defy you to show me another gigantic restaurant chain in the U.S. with double-digit comps, and that's why the stock rallied more than 2.5% today, and I bet it's got more room to run. Do not take it from me, though. Let's dig deeper with Patrick Doyle, the president and CEO of Domino's Pizza, in the flesh tonight to learn more about the quarter and his company's prospects. Mr. Doyle, welcome back to Mad Money.
Thanks.
Congratulations, Patrick. Still one more blowout. Have a seat.
Thank you.
We often talk about how it's a technology stock. I said that. I know you watch and squawk on the street. I don't talk about it enough being a people stock, because obviously it must be people to have this being one of the greatest stocks of our generation.
Yeah, it absolutely is. I mean, at the end of the day, this is about, can you get great people into the business, great franchisees. Over 90% of our franchisees started as drivers in our stores, and that's what ultimately drives it. We've got fabulous people in Ann Arbor working on the business, but at the end of the day, it's about the franchisees, the managers, the drivers. If you can get them excited about the business, and they are, that's going to drive a lot of momentum.
They do. They must love the technology that you give them.
Do.
We talk about GPS trackers this time. Now, what could that do for you guys?
Yeah, so we've been testing this in a few places. It's in Australia. We've been testing it in the U.S. a little bit, in the U.K. And basically, it's just letting you see where the driver is. But it's giving the customer information, but it is also potentially a way to be a little more efficient with how we're using the drivers, with the speed of delivery, making sure that they're going where they should be when we want them to. So just some good things there, opportunities that we're looking at.
That could be another step function up. I hadn't thought about it. That's great. Now, you also talked this time on the court, I love this, more stores, and one of the impacts of more stores is people are taking out more than ever.
Right, they are. So, I mean, people will not drive as far to get their own pizza as they'll have us drive the pizza to them. And so basically, people won't drive more than about a mile at the most to get their own pizza. And so typically when we open a new store, we find that all of the carryout business is incremental, even if we've taken some of the delivery area away from another store.
Well, I don't want to put numbers in your mouth, but that did seem to mean that there can be many more Domino's in this country than there currently are.
Yeah, there can be. So we've got 14,000 stores, just opened the 14,000th store in Cyberjaya, Malaysia. About 2 weeks ago, I was over there cutting the ribbon, and we've got about 5,400 stores in the U.S. We've got at least 1,000 more stores in the U.S., and as sales have been growing, that's been enabling more stores to be viable, maybe in smaller areas than we might have been in, or smaller towns than we were in before. So that number keeps kind of going up. And, I think people forget the population in the U.S. continues to grow a little under 1% a year. True. So you're going to get some of that growth as well.
I want to talk about international. When I go to San Miguel de Allende, it's a town in Mexico. I love the Domino's. It's fantastic, and they deliver it. I mean, I know I should be going Mexican, but sometimes you want a little switch up. And one thing that struck me is that they could use more there. They could use more in Mexican cities. Tell me some cities that might shock our viewers that people really have a craving for pizza.
Well, I mean, we're the biggest restaurant company in Mexico. I mean, we've got 650, Domino's in Mexico. So clearly Mexico right off the bat. But, I just came back from Vietnam, and, we've got 33, 34 stores in Vietnam. We're doing great there. We opened the 200th in Malaysia, which happened to also be our 14,000th. So, it's working in an awful lot of places. We're in 85 countries today.
All right, now, you have done great things for people who I would say have been able to work their way up in America. These are just 90% are great American success stories.
Yep.
At the same time, you pay a tax rate, 37%, and then unless you're 31, you'd be a huge beneficiary if they got corporate taxes down.
Oh, yeah, we would. Yeah, there's no question. I mean, nobody has ever given a special deal for pizza or restaurants. And so restaurants and retail in general, I think, are some of the highest tax-effective tax rates around.
One for one. Now, you've always been great to shareholders, but do you think you'd hire more people? You'd be able to do more expansion? What would you do with it if they cut that tax rate?
Yeah, ultimately, that means that you're going to be generating a better return. That means your cost of capital goes down. That means you can make more investments in the business. So, it's a positive overall. I mean, ultimately, you're looking at net cost of capital as how you're making your decisions around whether you're going to invest. Corporate tax rate goes down, then you're definitely going to see even more investment.
Well, you're going to see even higher prices. Patty, you just did a remarkable job. I really appreciate you coming on the show tonight. Thank you so much. That's Patrick Doyle, President and CEO of Domino's. Hey, if you haven't had one lately, I mean, I had 2 this month. They're fabulous. Thank you.
Thank you.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.